Hi everyone. Now we are into the first uh, recorded session for our POBC unit, which is the principle of bookkeeping control. And this exam is something you have to remember has the most difficulty when it comes to your level 2 qualification. And there are further subjects you're going to learn within this unit, but today we're going to be covering bank reconciliation and journals in a nutshell. Put it this way, we're not going to be looking at too many of it, but we will see some example of it. Uh, the bookkeeping control unit has a 25% rating for the whole of the qualification. So if you're doing bookkeeping, that will not matter. You just have to pass. If you're doing the full level 2 qualification, this will take towards you 25% of your overall qualification. And this exam, as I said, has 68% overall UK-wide pass rate. 68% means averagely people, 100 people sitting there, 68 people will pass the exam. Okay, that is with including all the settings. So this is fairly the toughest question, the module in the whole of the qualification. Easier being the introduction to bookkeeping unit. Introduction to bookkeeping unit has almost 80% pass rate there. Okay, so let's look into several things in relations to your bank reconciliation statement. So why we do the bank reconciliation? So if people ask me, okay, why bank reconciliation matters? You have to look at it from a perspective of my cash book. It's going to be an internal document. The bank statement, it is an external document. So it gives you a good control mechanism to check against something outside instead of something again inside. Why? Because if there is an error, if it's been replicated within the business, looking at two different cash books is not going to solve that one. And also you have to look at it, you can use it to detect fraud. Any sort of a miscreant effort in your within the business can be pointed out by doing a bank reconciliation. And the purpose of it is to find out anything missing on either one of them and making sure they both tally up against each other. So let's say that, for example, in my cash book, I may have some transactions there, but it will not show in my bank reconciliation. Sometimes on the bank statement, you have some transaction there. It does not show in my cash book. I need to make sure these information are tallied up, means matched, reconciled, and we only left with something called the timing differences. Timing differences are something we have already recorded in my cash book, but not yet seen in the bank statement. And it is a simple explanation is time. Normally, when you issue check to your suppliers, those checks are not necessarily will be banked straight away or encashed straight away. What is the meaning of it? They may not have their payment run or the bank run yet. So what happens in my cash book, after recorded it in my cash book as money out, but in my bank statement, it has not gone out yet. We call them as unpresented checks. And also, sometimes we receive checks from your customers and we're trying to bank it in our bank branch. It most likely may not clear by the bank statement being printed. Like, for example, if I go and bank it today is a Monday, it's not a bank holiday. So I go to the bank, I already have that check in my cash book as I have received the check, but in the bank, the check's been put there. And according to my cash book, it's done on this month. But realistically, that check won't clear until 3 working days. So probably I'd wait until Tuesday, Wednesday, maybe even Thursday. It could be if there is a delay. But you also have to remember, my cash book's already done that. But in my bank statement, it will not show. If the bank statement is going to be printed on 31st, we call those things as what is that again? Outstanding lodgements. Lodgements are something increasing the value of your bank statement when they go through. Unpresented checks will reduce the value of the bank statement when it go through. But you also have said about the entries in the bank statement, but they're not in cash book. How we deal with it? What we'll do, because bank statement had this information in there already, mean they already happened. if they already happened, what we can do about them? We can update our cash book with it. Our cash book in that case will have a new balance. Once you have a new balance there, that balance you will be able to compare against whatever we see at the back of your bank reconciliation statement. Bank reconciliation statements is done a certain format. We'll go through that format as well. Okay. So let's say here an example. An example, we have two checks and two what do you call lodgements. Those two checks and lodgements being put to the bank and we issue to the suppliers on 31st, and they're not showing in there. So what we do, we start our bank statement reconciliation statement with the closing balance of your bank statement. We add any outstanding lodgements and take away any unpresented checks. Once we've done that, what happens? It gives you the number supposed to be in your updated cash book. So let's see a couple of slides here. So it's, some introduction there. You may be able to pause and look into that in a minute. So we have uncredited items, which are the ones we have not, they've been paid into there, but it is not shown in my bank statement yet. This will be appear on the next statement. And then also unpresented checks. These are the checks is issued by the office. They have not been presented to the bank for payment. That means your suppliers hasn't used that. And you also know about standing orders, direct debit, bank charges, backs payments. Those things will also change the number in your cash book. Okay, so it has to be updated. So here, two major things which is in your cash book but not in your statement: unpresented checks and uncleared lodgements. They can be called outstanding lodgements as well. So we will see an example of it, how it works. Okay, and this is the steps I do to do the bank reconciliation. You compare the cash book and the bank statement, identify any difference, tick the items appear on both. That means you tick everything from both. Means if there is on both of them, you tick it. And once you tick them, you're only left with something not on either one. You will not have something, completely missing. We don't care about it. But only if there isn't one, maybe on my bank statement, not in my cash book, but it's in my cash book, but not in my bank statement. These are the ones we have to reconcile. So step 2 will be updating the cash book with any extra items appearing in the bank statement, bring down the new cash book balance, and then prepare the bank reconciliation statement. So I have something here to show you, which we're going to use to the bank reconciliation. Give me 1 second, please. Let me find the file. Okay. So let's see here. Let me share that screen with you. This is from a pretty old Osborne paper. Let me find the right screen to share. Window, that one. Okay, so here on the Osborne chapter activities, we have seen here there are two different books. One of them is my cash book here, and this is my bank statement. They're saying here, you check the items on the bank statement against the items on the cash book and update the cash book accordingly, and total the cash book and show the balance carried down on 31st of May 2024. So this question begs, you need to make sure, let me see whether I can put to the side now. So I will not have all of this taking the space. I can do the spreadsheet next to it. Okay, so here. Okay, that's fine. Let me share this way. I can share the desktop, share the screen. Okay, that's better. If I share the screen, I'll be able to see the spreadsheet alongside as well. So here, let's see that cash book and the bank reconciliation. Where you normally have most likely your opening balance of your cash book and my bank reconciliation statement will not always match. Why? Because you may have something from the previous period. There may be a timing difference, but it could be alleviated by looking at two facts. look for a check number which is not issued during that month. Can you see here? The first check was issued was 2476 on this month, but I found a check 2475 here in the system. What is the meaning of it? That is a check they issued last month, which we've been recorded in the cash book, but now they paid out this month on 6th of May. So it may have been done the last day of the 30th of April, and we had a weekend there, and then it cleared 3 days, working days after that. So this scenario, I will use this opportunity to highlight this opening balance and then that balance with that balance. Can you notice here? These two balances are matching with that balance. So that one is also ticked. Now let's go through one side. Can you see here? This one is matching with that number, but this number and that number, it's not working out for me. So I need to make sure I have to find a way to get this done in the the bank reconciliation later on. So let's look at the credit side now on the cash book. 2476, the check number here, yeah, that is here, and I'm going to highlight that one. And then what else we have after that? 2477, 327 pound 40. Yep, we have that as well. 2478, 289 pound 60. I also have that one. Okay, but then if you look at these two, are not shown up here. 327.20, 154.30, they're both not showing up there. And then also they're talking about P Singh. Sorry, this one, B Morgan, that is also not showing up there. So what I'm going to do, I'm going to clearly mark them with a circle. So I'm going to say this, this, and this. Okay. Okay. All right. Okay. Okay. That's fine. Okay. Yeah. Now I got it. Okay. So these are my timing differences. And then also I'm going to do these two here. These are the ones we got in my cash book. Sorry, the bank statement, but not yet showing in my cash book. So I need to ensure this information gets updated into my cash book. So in the exam, they may give you two different formats. The first format is they will give you this, yeah, like this way. Let me show you quickly. In this scenario, can you see here? They give you a cash book like that way. So you update the cash book alongside the bank statement. So once whatever it's here but not here, we can fill in those boxes and then we'll be able to find the statement. But that was for the old style. They have been given sometimes as well. But nowadays they'll do like this way. They will say here, closing balance board. That means closing balance board down mean, let me just say here, see control. We see it, we'll show you exam question in a minute. Okay, the amount, yeah. Let me see whether I can find it. Okay, so let's see here, debit and credit. It will show like that way. So what we need to do, we have to do this one and make any adjustment to it. And then once you've done that, they're saying here, adjusted balance carry down. This is how they will show that in the exam. So let's see here, what are the things we need to do? So for this one, I'm going to get the calculator quickly. I'm going to use the calculator to find out what is the balance of my cash book. Okay, the balance of my cash book is 755.50 plus 530 pounds 90 plus 386 pounds and 45, because these are already there. So we need to make sure we keep that in mind. Okay, so I'm going to keep this number. I'm going to copy this. Control C. I'm going to keep that number here for the purpose of doing the cash book. Okay, then we look at the credit side now. The credit side is going to be, where's my calculator? There we go. Find my calculator now. 200 pounds plus 327 pounds 40 pence plus 289 pounds and 60 pence plus 327 pounds 20 pence plus 154 pounds and 30 pence. So it gave me this figure here, 1,298 pounds and 50 pence. So this one definitely closing balance board down, it's a debit balance. Why? This is going to be this minus that. Yeah. So that is going to be 374 pounds and 35 pence. So what we do, you see these two transactions here. One of them is a payment, another one is a receipt. The receipt will increase this cash book. So I'm going to say here, AJ Traders, and that one will be a debit entry into my cash book, 96 pounds and 20 pence. And then what is the next one? Let me change that to 2 decimals. Yeah, that's it. And then next one here is Ali Finance. It is basically a payment money going out, 184 pounds 65 pence. So this will give me an adjusted balance board down figure of sum of these two. So that plus that minus that figure of 585 pounds 90 pence. Okay, so this now my target. I need to make sure I get this number when it comes to the bank reconciliation statement. The bank reconciliation statement should return me this one. So the BRS will look like this way. So if I'm going to go down here, Control Z, okay, that one. The bank reconciliation statement will look like, I can't show you an example of it. Let me see where is there you go. This is how a bank reconciliation statement will look like. So let's do this for this scenario here as my bank reconciliation statement. So it will not show you what to add there. According to that, it says here add and take away, total to add and total take away. Okay, you don't use no negative numbers unless it is your opening balance or the closing balance has to be a overdraft. You don't have to do those numbers here, because when they say add, we know we will add it. Less means we'll take it away. So do not use negative numbers. So let's see here. We'll keep that number, all of them there. So we can put that figure on my bank reconciliation. So bank reconciliation statement. So here the first thing is balance as per bank statement. Okay, sorry about the typing error there. Okay, bank statement, laptops. Now the number I have in my bank statement, according to this, it is 680 pounds and 95 pounds pence in credit. That means that's another thing you have to keep an eye on. Your bank statement will show credit if we have money in the bank, and it will say debit if you're overdrawn, which is the right opposite of your cash book. Because from the bank perspective, you are a liability. They owe us that money. From their perspective, and the balance should be a credit balance, because credit, isn't it? Now liabilities are credits in your T accounts. So therefore, the amount as per bank statement is going to be 680 pounds 95 pence here. And then we need to add. What we need to add any outstanding lodgements. Okay, so what are the lodgements here? First lodgement I can see is B. Morgan. That is what we need to add. So how much we need to add? 386.45. So at the bottom we say total to add. That is going to be equal to that number. This is what we're going to add. Then we're going to say less. What we're going to less? Unpresented checks. I'm going to use this again for the next question anyway. So that's why I'm typing all of that now. While I'm doing it, it's easier if I do that. What are the unpresented checks we have? We have Arnold and Sons, and we have P. Singh. Then what is the Arnold Son? 237 pounds, sorry, 327 pounds and 20 pence. And then £154 and 30 pence. And it says here, total to deduct. How much are we going to deduct? That's going to be that plus that. Okay. So now finally we have balance as per cash book. Because after we done all of that, the most important thing is whatever number we're going to get here is going to be equal to that number. That is the target now. So let's see here. We're going to have this balance, add anything here, which is the total to add, take away that number. Let's see, will we get £585 and 90 pence? Yes, we did get that 585, 90 pence. So let me just do one more decimals here. Yeah. This number, we have achieved it by completing the bank reconciliation. That is a magical feeling when you see there, oh, my bank reconciliation actually matched. Okay, so what I'm going to do, I'm going to do one more of these questions, which is a tougher question, but I will not think it will come in your yearly exam, because normally when there is a timing difference from the previous month, it usually only one entry, only one transaction could make this difference. So I have here another bank reconciliation statement. So here in this scenario, when you look at that number, the difference between them is vast. So let's find out what it is. Okay, so let's go to the calculator and work out what is the difference between those two numbers. 1254 58. This is for mindful education, bear in mind. These are also another long online or the blended lesson providers. They have very good resources as well. We used to use them in the past. The difference is going to be £125 58 pence. When you see that here, look, the first check straight away gave that away. Can you see here on my cash book, the first check I issued out 1008 sorry 689, and this number is 100688. So therefore, when I'm going to do this, I'm going to quickly highlight this option. Okay, so let's see whether I can find the highlighter or somewhere. I can put that number down. Give me 1 second. So I can't draw anything on it, can I? Oh yeah, I probably can draw. Yeah, so here you go. Highlighter option. I'm going to choose this one and this one and that one to that one. Can you see here? These are both matched now. Please remember, on the previous transaction, I have shown you as is the closing balance of the bank statement is the one goes in my bank reconciliation report. Okay, not the opening balance. Opening balance are the beginning of the month. So when we reconcile it, it should match whatever the number we have on my cash book as well. So these two entries eventually gave me that number. So let's go through one side first. Let's look at the credit side or the cash book debit side. So the money coming in here, that number is matching that number. Fine. Yeah, 6 7, that one, it is here. Absolutely fine. And what else we have here? No, that is not there. That is not there. But there is something amiss. You can think about it. Sometimes you may have put some items, they all happened on the same day. Can you see here? July 15th. These three numbers, I'll come back to that later because these numbers not correlating with this. Let's find out if there's any more there. Yeah, that number here, that's matching that number. And then do I have any more? Yeah, that's nothing else there. Yeah, let's see here. That number's right. Yeah, okay. Yep, that's fine. Yeah. So let's look at that one. This side, we have that number 59832. So here, that number and that number. Galway 6328 is there as well. We matched that number. Yeah. And then what we found now, there are several transactions. are missing. So let's say here, I'm going to draw something for that. Let me see what I can do with this. No, that way. No, okay. We'll put a different color for this. Okay, so we can probably um, draw with that. Can I use that to um, I saw pencils. I can't draw something else. Okay, draw. Okay, that's fine. Okay. So let's see here. Bank charges, utilities, something you may not see that until you see the bank statement. Yeah. And also you can see this backs of 451 pounds and 16 pence because it comes through online. We may not see that as well. Okay. So those numbers are not here. And then also that one, 398 pounds, 37 is also not in my cash book. But on the cash book, can you see these three numbers? So I'm going to go back to quickly to my calculator and check what is those three numbers respond, like 796 pounds 32 pence plus 512 pounds 34 pence plus 317 pounds dot 21 pence. Altogether, it gave me that number. Can you see these two numbers we found? That and those three are reconciled because when we went to the counter, we put these two check and the cash together. Only one entry is made in my bank statement as we put them as one paying in stub. When you pay that as one paying in stub, they will put all of those information together as one entry. Okay, so these are the things I need to make sure I have to keep an eye out for. Then also I need to think about these entries and that two entries. What are these things are, guys? These are your timing difference. What is the meaning of timing difference? Ooh, they are at the very end of the month. You notice that here, this one was paid on 29th of July, and this is on 31st of July. The chances of them going for a bank run and clearing by the end of the month is almost impossible. Yeah, there's a possible chance these may get cleared on the following day unless they are with the same town and the same bank branch. It is a possibility they can clear on the same day. If the issuer and the recipient are from the same bank, it is a chance it will clear normally on the same day. If it's in the same town, it can clear in one day. But regularly, checks take up to 3 business days. Okay, so in this scenario, I need to update my cash book with these transactions, and also this one will get updated and we will give you a new cash book balance. So what I'm going to do, I'm going to copy this statement. Yeah. And then we put those numbers here. Okay, so let's see here how we can go from that. Okay, so bear with us, please. Let's see how this works. So we have to add and we have to take away something. Okay, so insert. How many transactions we have to update? We have to have several transactions there. So let's bring that back here. Okay, now we have the right number now. So here, 1, 2, 3, 4 transactions we have to do. So insert. So we have another line there. So we will work from our number, whatever we're going to get. So get the calculator out again, guys. Calculator to help us to find out what is the number we're looking for. 1129 plus. It's a lot of numbers there. So we need to make sure we've been prudent with this. Check the numbers and double checking them. 647.87, because that's why it's very important you get a scientific calculator where you can trace back any errors you make. In the exam, you are allowed to have a scientific calculator as long it doesn't have no printed formulas on them. Okay, so it is imperative you're keeping an eye on it. Okay, 300 17 pounds dot 21 plus 845 pounds 20 plus 458. I may make a mistake here and there, but just bear with me, because if I'm using my uh, laptop, I am bound to make something wrong. I know it happened in the past as well. So here, the debit side is that much. Let's find out how much is the credit side on my cash book. So let's see, the cash book total is going to be 326.17. This one, 563.28 plus 598.36 plus 642.15 plus 659.14. So all of that together, it comes up to that number. Okay, so that number. So what we're going to do, this is going to be a debit balance brought down, that minus that. That is the amount we start with. So what are the entries we need to make? We need to put these three on the credit side and that one on the debit side. So let's start here. The first one is bank charges. How much is that for? 12 pounds 58. Then we have utilities. Utilities for the value of 658 pounds and 94 pence. And then what we have here, Asher audio, that is a debit number, which is 398 pounds and 37 pence. And the last but the least, we have Ravel Limited, and that Ravel Limited is going to be 451 pounds and 26 pence. I think I have got that right. Okay, so now what we can see here, the number I'm going to get is going to be equal to that plus that minus that. Okay. Now I should put a formula properly. Okay, so here. Okay. Okay, let's do that properly. Is equal to that plus that minus that minus that minus that. Okay, so it gives me 2,874 pound 18 pence. This is the number I expect to see in my bank reconciliation statement later on. So what is the balance as per bank statement? Look at that here, 3,020 pounds and 80 pence. So I'm going to say 3,020 pounds and 8 pence. What are the things I need to add here? So I need to get rid of these numbers. Let's see what is the number I got. What are the outstanding lodgements? These are the two outstanding lodgements. Eventually, when they go to my bank, they will be on the credit of the bank. That means it will increase my bank statement balance. So that one is going to be for Chazen production. Chazen production is going to be 458 pounds and 25 pence. Next one is sales. So I'm going to say sales. That's going to be 97.14. Yeah. And this number will eventually get added. So this one is going to be this plus that number. Okay. And unpresented checks is Nelson Electronics. Nelson Electronics. And the next name is Terry Motors. Okay, so let's see here. What are the numbers I need to add here? 642.15 and 659.14. 659.14. Can you see here the total to deduct was 1,301 pounds and 29 pence. So when you have this, add that number, take that away, my cash book balance showing as 2,874 pounds and 18 pence, which is exactly the same number we found out from my cash book. Exactly the same number. Okay, let me show you a practice paper quickly from the recent exam. This is from Osborne, I think, so bear with us. Let me stop sharing and I'll share this one. So I'll be able to go back in there and show it to you quickly. Where are we? Where are we? Where are we? Where are we? Okay, that one, that one, that one. Practices final. I'll show you the exam paper from Osborne papers. So let's see here a bank reconciliation, how it looks like in the exam. Can you see they have given you a question like this, right? And then see how they have shown balance, closing balance board down and adjusted closing balance. Since they use the word closing balance, this closing balance is your balance carry down figure. Okay, not the balance board down figure, balance carry down figure. So if you have money in the bank, this will be a credit. If you have an overdraft, that will be a debit. Yeah, because it is the opposite of balance board down figure. Okay, so it is another name for opening balance. This one is the closing balance they're asking you. Can you see here how they done it? In the exam, you'll have a drop down menu. You'll be able to select your answers from there. Okay, so bank reconciliation statement are done. Now we're going to look into what is journals. Okay, what is a journal? Anyone can think about a journal. What is a journal? The word journal means to you. Have you heard about that word before anywhere? Yeah, you may have heard about maybe a diary. Somewhere you can record your day-to-day activities. Okay, day-to-day activities such as what? Oh, like where I'm going, where I visited. Oh, I have to do this one. I have to make this done. I need to pay my bills. Yeah. Oh, and the journal somewhere on the corner. Oh, this is when I'm going to go on holiday, counting down on the days. Okay. So like that way, the journals could be used for many reasons. And a very important part of it, the journals can be also, let me check here, will be used to record, personal information there. But again, in accounting, what does a journal does to you? Journal is a book of prime entry for transactions you do at the end of a period. For example, such as, think of an example of it. What do you think journal can do to you? It is most likely to be um, like an adjustment. Like if you guys know on your, um, you know, um, in your businesses, not every transaction will go through a day book. If imagine that, if you have a credit sales, you go through a sales day book. If you have purchases, you do the purchase day book. If you have cash sales, you go through cash book. But what if there's a transactions, there's none of this involved there? For example, you think about a depreciation charge for your non-current assets. What I'm going to do with it? There is an irrecoverable debt. People owes you money, they become obsolete. So therefore, or means they just gone bankrupt and stuff like that, right? So what we can do there, we have to use another book of prime entry to record that transaction. That book of prime entry is itself the journals. Okay, so let me show you quickly here a couple of slides. What is the journals are used for? Okay, so that one. Teams, stop sharing. Share. These are the slides created by my colleague before. Probably know Veena. She has created so many new, like the slides before I started working there, and I'm still using those slides at the moment. I'm not that creative. If I do that, I'll become very overly creative, and therefore sometimes I stick to the very simplistic ones like that way. So on the journals, for example, journals are used as the book of prime entry to record non-regular transactions. So you have a way of tracing back those transactions by writing some sort of a narrative in the journal. So this is a journal for book of prime entry. And then sorry, a journal entry for one of those initial transactions. Like this way, we haven't had a cash book yet. If we record that in my journal like that way, the thing about journal, there are 3 rules. You need to have 2 accounts at least. Your debits must be equal to your credits. So if I have 3 entries there, all your debits must be equal to all your credits. If you have 2 entries there, one debit, one credit, they should be equal to each other. And then also at third, at the bottom of it, you need to write down why we do that. That's a memo. It is a memo to show why you record the transaction. Because remember, sales day book, we know what goes in there because it's only credit sales. Purchase day book, credit purchases. Journal could be anything. So therefore, whenever you enter a transactions, you need to write a memo, a word I normally use for in this scenario as the relevant. There's a particular word there. I'll come back to it. It'll eventually beckon on me. We'll see that in a few minutes. It will probably come back to me. So, for example, this is the opening entry. And then also we have to look at the irrecoverable debt. So what is irrecoverable debt? Irrecoverable debt is sometimes what customer owes you, they no longer be able to pay you. Normally, your customers are part of your RLCA. If they're part of your RLCA, what is the part of it? You think about it as these ones are your assets. Your customers are your assets. But what if they are unable to pay you? What if they are unable to pay you, they're no longer your assets? Because you realistically cannot show that number in my statement of financial position because it makes no sense to have a customer who's unable to pay as your assets. You're basically overstating your, the number of assets you own. So therefore, we need to write it off. The journal entry for this will look like this way. Will be a debit entry into your irrecoverable debt account, which is an expense. The VAT we already charged, we can claim it back. So therefore will be a debit. That means it become an input tax. And then RLCA. This is the old name for RLCA, SLCA, Sales Ledger Control Account. It tells you how old these slides are. This is SLCA or RLCA. That will be a credit because we basically removing that number, okay, from my credit customer list. So they're no longer in my general ledger. And then also you have to write that off in your subsidiary ledger, which is the receivable ledger, SL or RL, whichever you choose, that is where you have to remove them from. For example, Fred owes you money, 120 pounds. He has run off to Spain. Sorry, Fred. I don't know any Freds personally, but Fred has done a runner to Spain. He owes us only 120 pounds. Still has to be recorded. So we are unlikely to get the money. We need to write that debt off as irrecoverable. The debt is made out of 100 pounds plus VAT of 20 pounds. This is the entry will be RLCA or SLCA will be 120. Credit, VAT, and irrecoverable debt are both debits. Okay. And then you have to look at that also. Do not forget to update the sales ledger card for Fred. That means if I'm looking at my receivable ledger, the account for Fred should also be written off of this 120 pounds. That means you have to make sure that balance goes to 0. Okay, so let's see here scenario wise. I'm going to bring the spreadsheet again. Let me see. You can see that spreadsheet. Yeah, perfect. So let's look at the spreadsheet here. Let's open a new one. So we're looking at the wages. Now we also record entries into my journal for your wages transactions. So for example, a business to employ you, what you need to remember, it costs them money. Let me just put the light on. It's starting to become very dark because sun already set. I didn't realize that one. I'm in a kind of a unlit room there. It doesn't help. So we got the lights back on now. So to employ you, it takes more than your salary. And you're aware of that. Why? Because they will talk about that contribution employees has to make has been increased recently with the government budget. So there was a talk about employees are unable to hire new staff because the cost of it, that's a lot of the politics goes on there back and forward. I'm not bothered about it. But the fundamental part is here, when I'm going to employ somebody, the cost of employing them is not purely their salary. There is also some contribution we have to pay from the employers. So here I'm going to give you a hint of it. So let's bring this now here. The total cost of employing you is your gross pay plus any employer contributions. Okay, so this is what is going to be equal to your what we call wages expense. So let's put these two in play next to each other. Column width, I say 615. No, 15. So it has to be 24. Okay, so let's make it like that way. So this plus this will be equal to that one. Okay, so let's go home. And then I'm going to centralize this all. Okay, that's fine. So gross pay plus employer contribution will be your wages expense. So you have to remember, what is gross pay? It will be inclusive of. So I'm going to put down here borders. What is the gross pay means? Whatever salary they're going to pay you, isn't it? Whatever salary they're going to pay you is your gross pay. So in this scenario, what does your salary consist of? Your salary, you have certain contribution you have to pay from your pocket. For example, you have payee. What is a payee, guys? That is the tax you pay. Okay, that is the income tax you pay. That is your payee. Okay, and then also you have national insurance contribution. Employee means you pay some national insurance. I'm going to say EENI, okay? National insurance employee. And then also you have pension employee. I'm going to say PNEE. Yeah. And then you also, what else you pay from your wages? You also may pay some other things like union fees, charity contribution. Why I put capital, I don't know. Union, charitable contributions. You may pay for childcare vouchers. If you're a student, you pay loan repayment. You may pay CCJs, county court judgments, because they take the money from your wages directly. Child support payments, it can go from your wages. So many things can go from your wages, but employer also have to contribute two things, which is going to be your this and that, employer and employee. So it's going to be NI, employee, and this one is employer. This is going to be called ERNI. Yeah, this is the employer NI, and then this one is pension employer. I'm going to say PEER. Okay, so yeah, I should have done other way around. It makes easier. EEPN, EPEN, and this one is going to be ER pension. Okay, now you don't do any other things from the employer. So the total contribution in this scenario with the employer plus the gross pay will be equal to your wages expense. Okay, but you also have to remember these three together will be going to somebody call the His Majesty's Revenue and Custom. This is your tax office. These three payments will be equal to that one. So here, let me say here, this will all will be going to HMRC. So I'm going to put one big down there saying it's going to HMRC. This one will be called union liability. Hold on, not these two, only these two. I should have done the wrong way around. Give me a second. No. There you are. So center, yeah, this is all goes to HMRC, and this will go to your pension provider. Center, yeah, and thus union liability, and then whichever it is there, that will be the liability they have to pay. Most likely to be checked on these, okay? It's very rare they will check you on this one. But what you need to remember, I'm going to put some numbers there to make things easier for you to understand. So let's see here, I'm going to insert some boxes. I'm going to do those numbers here. And then I'm going to work my way to see what is what. Okay, so let's see that here in this scenario. Okay, so cut, paste. Okay. Okay, so now let's see here what we have. A gross pay for employee, for example, was say 24K for the year. So per month is £2,000. Okay, so here you pay, you have £1,000 tax-free allowance for you. Take that away, 20% for the rest is £200 your the tax, £150 your national insurance, pension you pay £100, say £130, and you pay £20 to your union. So this is your deductions. So once they done all of that, you have something called your net pay. This is the amount you're finally going to end up having. How much is your net pay in that scenario? It's going to be equal to that minus the sum of all of that number. So that sum of all of that number, 1,500. You take home 1,500. But when there is an employee contribution, the business also expect to either have to pay a slightly higher rate. Okay, so if I pay £150, national insurance is £200. The pension, they also pay £200 into the pot. So the employee contribution is going to be this plus that. Okay, so that means my total wages expense to employ you per month is going to be that and that number. So out of that 2,400, yeah, you need to consider that 2,400 is what it takes to employ you, just including your gross pay and the employee contribution. So now let's see here what are each other contributions are. So let's see here, how much is your tax and insurance and everything together? That's going to be equal to that plus now that, and plus that one is 550 there, equal to this one. This is going to be that plus that is going to be 330, and that is going to be equal to that number. So when you notice that here, can you see 1, 2, 3, 4, all of them here, add them together equal to sum of that. Hold on, your net pay. Let's see that whether it gets the net pay. That's going to be minus the sum of all of that. Will I get the net pay again? So that is the question. Yes. So my net pay is confirmed by this way. Okay. But how we enter this in my ledgers? This is where you have to know a little bit of an accounting. First thing they normally ask you, record the wages expense. They give you some of the numbers there, and then you have to work out the numbers. So what we need to do, we have to do wages expense. So what we'll do here, I'm going to do the journal entry for that. Okay, so it's going to say details in the journal and debits and credits. So here, let me make it slightly bigger. So the first scenario, yeah, create wages expense. This is the first entry we need to make. Okay. Yeah. So in this scenario, what we'll do, we create the wages expense. It has a debit entry. Why? Because this one, it is basically an expense. Expense should be debit. So what is the opposing entry? We create wages control account. This wages control is a special holding account where we can do our wages expense to split to all these relevant parties. Can you see here these three different parties and the employees? So the first scenario is we create the wages expense, and on the wages expense, we have to assume we need to make sure we create a control account to disperse this 2,400 to all the right beneficiaries. The next one is saying record HMRC liability, record HMRC liability. Okay, so what we're going to do, we have wages control as a debit entry now, because we're going to use this number to populate the rest of the accounts, but we disperse this amount now. So how much we owe HMRC? 550. Here I put HMRC liability account 550. So what is that going to do? It's going to start eating into this wages control. By the time you finished everything, wages control will have zero balance. Third one, they'll say record pension. It's a pension liability. Okay, so record pension. I'm going to say here pension liability. We'll do that in a minute. Plus to wages control. Wages control. How much is that going to be? £330. And then here, pension liability. Why we call that a liability, I'll explain to you why. Liability means we don't pay them straight away. We collect those, we keep it in a pot, and we pay them like end of a period, like once in a month, once in a quarter. It depends on how the business is structured, those liabilities. Okay. The next one we have, the last but the least, union cost. So what we're going to say here, wages control, £20, union liability, because it's not your expense. Remember, the business don't have this as an expense. These part here, part of it is an expense. The rest of it is going from the employee themselves. Therefore, when we're going to account for the expenses, we only done that and that. It's the total expense we care about. Okay. Last but the least, we have employee payment. How I'm going to do it? What do you think? It is going to be again wages control, debit 1,500, and then bank credit 1,500. So when we done this now, if you notice, all of these journal entries, we have to put a memo at the bottom of it. We say, after you've done all these journal entries, recording monthly wages expenses. Yeah, this is the narrative. I don't have to do any more there. Can you see here? Every entry has a debit and a credit. Can you see all of this matching each other? And then if you look at that again, this wages control, we have 2,400 there. If you add these four together, that will be 2,400 as well. So can you see here, if I'm going to do a sigma, can you see that's 2,400. That gives you an idea of how the wages control account is worked. So let's show you an example of it in a minute. Yeah, there are some slides there, which I'm not going to be overly fussed about. So let me show you. Yeah, We have one more person here. Good. Let me check. We have. Let me check here. Where are we? Where are we? An exam style question quickly. Okay, so bear with us. Let me find out from the Osborne paper, so whether we can show you a practice question with a journal. Okay, so for example, this is the exam question you will get. Let's see here, an exam style question. Controls, Windows, down. Can you see here? This is an exam style question when it comes to it. You also notice it gives you gross pay to employees, income tax, employee national insurance, employer national insurance. So I'm going to give you an idea to look at this as a desktop. Let me check it again, the screen. So let's keep that in mind with this in tandem with what we have here. Okay, so now let's look at it. In this scenario, the gross pay to employee and the employer national insurance. Can you see these two here? They have a particular code. Can you see 700? In your accounting software, 7 starting with anything starting with the 7 on the nominal code, they're your expense. So these two will be your expense when it comes to this particular wages expense we're talking about. So therefore, your gross wages plus any employee contribution. In this scenario, the answer will be, so let me check quickly whether I can write it. Yeah, type text. So here, the gross wages is going to be 6,500 so 65,350. And then this number here, next box, the employer national insurance is 7,353. So my debit side is done now. I have to do the credit side. How much is the payee? 12,259. And then what is my national insurance again? So let's say the national insurance totally, it's not employer they're asking the total national insurance will be these two together. That's going to be 13,415. Yeah, 13,415. And then we need to find the net wages. So the net wages will be that minus this and the employee national insurance. So let's put that number here quickly. Let's see it works out. 65,350. The payee tax is going to be 12,259. 12,259. Then we have employee contribution is 6,062. None other numbers are matter. So here, let's get rid of these numbers. Let me see whether I can make it a little bit bigger. There you go. Okay, so yeah, so here, the number I have in mind is these two, okay. And then this one here, that one is 0, and that one is how much? 7,353. Okay, let's see all these numbers work out for me. Okay, so let's see here. 65,350 we have pay, national insurance employer, national insurance employee. We have done all of those numbers. The wages expense was 703. Total HMRC payment is that £47,000 and 29 pence is your net pay. So here, let's say 47,029. Let's calculate it, get the calculator out of the way. Let's see both numbers are matching. So here, 65,350 plus 7,353. And that is going to be 72,703. Yeah, and then let's look at the next number, 12,259 plus 13,415 plus 47029 72,703. Your debits are equal to your credits. Can you see here this number we highlighted now? According to this, they have different numbers. So let me check this. What is the meaning of that? Two. Two means these are all liabilities. Even your net wages is a liability until you pay that, because the businesses do the payroll run before they actually paid it. So when they run the payroll transactions, initially they will become a liability account until they pay. Once they pay it, this will be cleared from your the liability there. Yeah, net wages account, it will be a liability, and then the bank will be credit, net wages will be debit, it will be gone away. So these are the accounts they use when it comes to exam style questions. Okay, guys, I hope you found this session very useful, because I know only some of you are here, but of course it's going to be very what do you call again, recorded as usual. People can see that obviously in a later time. And yeah, I certainly appreciate you guys attending it today. And again, thanks, Emma, for
Thank
communicating
you.
all this in through. And yeah, it is good in a way. We managed to get this out of the way. So the next time we come back in, we have the biggest part of the bookkeeping control unit, which is the errors. The errors and the suspense accounts. And Emma's already shocked. I know this. Yeah. You
I
get that in level
one
three
more
as well.
error.
Yes.
Can I